So welcome everyone to another Chat with Chu conversational series. And as many of you know, the intent of this series is really to explore not only the topics that are of interest to us, and today the topic that we'll be discussing is green banks and how green banks could help us solve some of our climate challenges. But as is always the case, before we get into that, I always ask our speakers to talk about their personal and professional journey. And then we actually talk about how that relates to the work that everyone's doing. So let me just start by introducing the three guests that we have. Kerry O'Neill, who's the CEO of Inclusive Prosperity Capital. And we have, I always, no. I always have is it Cuan or Cuan? Cuan. Okay, that's what I was. The Irish spelling is pronunciation is Cuan. So anyway, Shawna Gabriela Cuan from Sustainable Energy Finance, and it's based in Salt Lake City, Utah. And Kirsten Stasio, who is also CEO of Nevada Clean Energy Fund, and clearly she's based in Nevada. I think you're based in Reno, right?
Yep, Reno.
Yep. So we have two Southwestern Green Bank leaders here, and Kerry, who I've known for quite a while, is sort of a national expert on this issue. So hopefully we'll have a really good informative session, as well as we'll leave some time obviously at the end so that you can ask questions and engage in discussion. So that's the purpose of all of this. So let me turn to Kerry first, and then we'll come back to Shawna, and then to Kirsten to kind of share what your personal and professional journey has been getting to this point where you are leading really important green bank organizations. So Kerry, let me turn to you first.
Thanks, Ed. Great to be with you, Shawna and Kirsten, and really sorry I couldn't be in the room with all of you. It's kind of unfair, as you get older, trying to summarize your personal and professional journey. It becomes more and more challenging. But and as Ed knows, I'm a sector jumper, and I've had a kind of winding career. So there's a lot to say. But let me try to summarize. Let me start on the personal journey side with a couple of themes that maybe I'll tell a few stories about. And then some of the themes on my professional journey. On the personal side, I grew up in a family of three. When I was in elementary school, moved to a very rural part of Western New York State, farming community, lived in the county seat, which was 5,000 people, and graduated high school from there and went to school from there. And so on the personal front, we had moved from a suburban community to a rural community. So I have always felt somewhat as an outsider, and that's something I've carried through even to today. Maybe that's personality or circumstance, I'm not sure. But being from a rural community is something also that's been something I've come back to in my personal and professional journey, because rural communities have been left behind, and that was certainly true in my community. And another aspect of this is as a woman feeling like an outsider, and that was true where I went to school and in the early parts of my career. So I'm going to come back to a few of those themes. But other aspects of my personal journey include intellectual curiosity, which is played out in my professional journey, and empathy, which plays out in where I am today. So just a couple stories on the personal front. When we moved to this rural community, my mother felt very uprooted out of her element. I think us kids did as well. But we adapted, we were kids. And I remember one of my first friends that I met, first week of school, she invited me over to sleep over at her house. And it was quite a shocking experience to me. The house didn't have heat. The house didn't have indoor plumbing. But it was a regular family, you know, great meal. We had a lot of fun, and I was a kid, and I didn't really think anything of this, but I was telling these stories to my parents when I got home, and it was like, oh my goodness, what is this? This is not our current experience. And that taught me a lot about kind of adults' reactions to and kids' reactions to relationships and circumstance. And I think that was the beginning of my realization of wow, we live in an unequal world, and I'm playing out that unequal, you know, I have different advantages than others. Um, One other story I'll tell on the female front is when I was very passionate about getting into technology, and I wanted to go to MIT, and that was like something I really, really was passionate about. I came from a high school that didn't have AP, that didn't have really guidance counseling. It was not connected into those sorts of communities. But I applied, and in my acceptance rejection experience, I actually got a rejection letter and acceptance letter. And that's because they messed up my sex. And interestingly, the male version of me got accepted and the female version of me got denied.
No way.
And I carried, and I went. They apologized. It was a mix-up, but I did carry that kind of feeling of being not right, not enough, you know, less than, with me in that experience. And it's a very male-dominated, you know, when I went in the 1980s, very male-dominated. So I share some of those stories because when I think about my professional journey, clearly, because I went to MIT, I studied computer science. On the professional side, technology has always been a theme for me. I view that as like an enabler to doing great things. And while I did do technology when I was first out of school, I got involved in a lot of different things in a lot of different sectors. And part of that had to do with, in my intellectual curiosity, really, I found myself, and I still do this, attaching myself to people that are passionate, creative, smart, and not really about industries. And so following people has allowed me to get involved in, you know, transitioning out of tech early in my career into product development. And this was in the late 90s, and I was in New York City, and Silicon Alley and dot-com boom was coming online. And I was able to translate that into e-commerce. And I transitioned from e-commerce into the business side. And I found myself in a Fortune 500 company running call centers and customer service related to e-commerce businesses. And then I had the opportunity to spin out of a Fortune 500 and run a group of you know, business lines. And what does this have to do with kind of like a professional journey? Kind of nothing, right? I all along the way I was following people, but there are also people in my professional life who were giving me opportunities and saying, hey, you're smart, you know, you can get things done. Will you go run this call center that's related to e-commerce? I'm like, oh, I don't know anything about call centers, but sure, I'll take that experience. It wasn't actually a fun experience. I didn't love it, but I learned a lot about how you manage really large teams and motivate entry-level folks, or folks who are in a kind of a redundant job to do well. I also learned from the corporate experience, because I had had a kid by that point, that, you know, it's really easy to burn out. And I did burn out. And I was the CEO of a big organization with 500 people. And I was like, I just can't do this anymore. And so that was the first point in time, 2000, when I left the corporate world and really tried to right size my career to having a family and doing good, kind of taking my skills and doing good. But this was early days for that sort of purposeful capitalism. And it was not easy to do that. So I ended up going back into the corporate world and got involved in a financial services organization. Didn't think I would work in financial services, but loved the CEO, loved the people, loved the commitment to customer service. I said, all right, I'll try this. I've got a lot of skills to offer in terms of managing organizations. and found myself ultimately running an organization with 1,000 underwriters all across the country, providing services to the top 20 issuers on Wall Street for asset-backed securities and working with the top lenders. It was an amazing experience. But again, I experienced a lot of burnout, and it was kind of at that point that I realized it was time for me to kind of pull together all these different experiences that I had and be intentional about what sort of sector I wanted to work in. And that was my shift into climate, this in 2007, 2008, kind of waking up to like, oh my gosh, there's a climate crisis. How did I not know about that? I went to MIT. I was from an engineering science background, and really chose to, really focus my career and my energies on that. And I walked away from my big corporate job and really started to just go to school on what are the opportunities in business and government around climate change, and met some of my first collaborators that ultimately became kind of the beginnings of the Green Bank movement. And so let me just stop there, because that's about 10 minutes, Ed, and we'll come back to the Green Bank side. But just one last thought on being an observer and feeling like an outsider. I think what that's given me professionally is the ability to really look at kind of the whole ecosystem in a given industry. And I've had exposure to a lot of them, and some of them have gone through crises like the dot-com crash and in the housing crisis, that crash. And really seeing how the different pieces fit together. In corporate speak, that would be the value chain. And thinking through that sort of strategic landscape as to what are the new business model opportunities. So let me truly pause there, because that'll speak to the Green Bank piece later on.
Thank you, Kerry. And I think many of us feel, things like imposter syndrome, but also many of us feel like we're always outsiders, no matter how
Yes.
we're in the workforce in different settings. So, all of you who are starting out, that's something that it's okay to feel. And I think that's how to deal with that is what we all need to learn from people like Kerry. So I appreciate that very much. For Shawna, let me go to you. No, you first, because I want to go back and forth because Kirsten's on the screen as well. So.
Well, hello, everybody. Really happy to be here. Thank you, Ed, for putting this together, Kerry, for connecting Ed and myself. I'm Shawna Gabriela Cuan, and I really appreciated what Ed came to me about when he was presenting this idea, because when I've been asked to speak, it's almost exclusively my personal life or exclusively my professional life. And we kind of expect those to exist in two different spheres. And especially in the professional career that I've had, I've really tried to keep my personal life out of my professional life and created a very unhealthy tension as a result of that. So I really appreciate where Ed was coming from on this question, because at the end of the day, your personal and professional are absolutely interrelated. And if you're fortunate, you do get to pursue a professional career that lives up to what you want personally. So Kerry, what you were saying about sort of repivoting and finding new sectors and rebalancing what your life looks like, I really relate to that, because for the longest time, I spent a lot of time running away from the personal and really just focused on the ambition, the achievement, the professional. And so using that as kind of the scene setter, where I grew up is kind of where I am now. My dad is from Cuba. He is half Chinese, half Cuban. And then my mom is from upstate New York, from Syracuse. She's Irish English. So already, I don't know anybody that looks like me. I don't know anybody that has a background that I have. But a lot of people know what it's like to have an immigrant parent. A lot of people know what it's like to have parents who come from very different worlds. A lot of people know what that's like. And there's a lot of connectivity that you can find despite being different in certain ways. And I grew up in Berkeley, California, this very liberal Mecca, this very accepting world in a lot of ways. And so I was fortunate. I grew up in a very urban environment that wanted to embrace my differences and wanted to bring that forward. But because of this immigrant upbringing, because I'm the oldest of three, I had this sense of independence and self-reliance, and I can't lean on anybody. And so when I was starting to think about professional careers, I really just wanted to stand on my own. I wanted to be my own person. I went to school in Santa Barbara, and I was really fortunate through the UC system. You can study in DC for a semester. And I was like, this is what I'm going to do. At that point, I had an amazing history teacher who got me obsessed with politics, got me really into civics. And, you know, a lot of us have those stories, right? It's this one person that kind of catches an interest in your brain and you can't get rid of it. And I was like, I want to get into politics. I want to do something with government. Studied political science and went out to DC, which in your 20s, to be able to go to DC, that's an incredible opportunity. I mean, if anybody's been before, you know, just the resources, the capacity, the people, it's so overwhelming in some ways and so exciting in so many other ways. And I'm 20 years old, so I have no idea what I'm doing, but I just think this is the most amazing thing ever. And I've had a really phenomenal career in DC. But going back to the people, DC is a very achievement-oriented city. It's a very career-oriented city. Workaholics are revered. People love calling themselves workaholics. There's always a one-upsmanship, and especially the fields that I was in. I actually worked in, we were federally funded research and development center. Basically, we worked as consultants for the federal government. And so whether I was submitting federal grants or executing work, or eventually working for the Navy and the Marine Corps, there was a constant need to achieve and do more. And one of the things I heard directly from a boss at one point was, you need to get your master's or you're not going to get a promotion. You're not going to move any further in this organization. And I was like, okay, I hear you. I'm going to go do that. 3 years at night, Georgetown, to get my master's because somebody told me to. Not because that was something I personally felt I needed or that I was lacking. I don't regret that experience. I very much appreciate going to Georgetown. It is an amazing institution. I got to have professors that were active practitioners of the work that I was interested in. And so that was really special, but incredibly hard. So you take this workaholic culture where I'm working 10, 12 hours a day, I'm going to school at night. And then part of my job at that point, I was really lucky. I got to start doing wargaming and tabletop exercises for the Navy and the Marine Corps. And we were doing a lot of work on climate change at that point. But we were also traveling internationally. So I'm trying to submit a final while I'm in India. I'm trying to get homework done while I'm in Kuala Lumpur. And it's not to complain, but it's just to sort of carry that what you do professionally matters, but you also have to consider the toll it might take on you personally. And I was so stretched. So Kerry, to your point about burnout, I was in DC for almost a decade, and I had met my husband. And he was also sort of, we were looking at this and then we looked at each other and we're like, I don't know that we can do this anymore. I don't know that we can handle an 1.5-hour commute and we're working 10, 12 hours a day. If we wanted to buy a house, we'd have to move even further out. And I mean, we have a housing crisis now. Back in DC, we would have spent at least $1 million just to find like a townhouse, right? And so for our personal needs, we're like, we can't do this anymore. We're so done. And my husband's from Salt Lake City, Utah. And I'm from Berkeley, California, and I never thought I would be somebody who would ever live in Utah. I was kind of that person that's like, I'm gonna fly from California to DC and then back again, and I don't really go anywhere in the middle, which is horribly like, you know, small-minded, and that is an issue, the sort of liberal California mindset. But I was like, okay, but there's something here, you know, there's the Bay. If we just picked up from DC and went to the Bay Area, where I'm from, we'd have all these same problems again, right? And the cost of living, it's huge congestion, tons of people, right? And there's a lot of culture there and it's a lot of fun, but were we just going to reintroduce all those same problems back into our life? Probably. So you can see that tension again, the personal and that professional. And we were constantly seeking an exterior solution to solve what was happening personally and what we needed personally. But we did move to Utah, and talk about being an outsider. So most people, what do they know about Utah? The LDS Church and skiing, right? It's one or the other. I'm not either. And then I also look like I look, and I come from my background. And I mean, every Utahn I met for like the first year, they're like, oh, you're from California, aren't you? Like they could just tell there was this like, you are not us. Okay, all right, this is a little weird. And I was working in the governor's office of energy development at the time. I was really lucky. I got to work at a state level to see because that love of politics, this desire to keep working and helping others continued. And I was really lucky that I got to manage a renewable energy efficiency programs. But Utah, like Arizona, we're kind of an all of the above state. So we have a very robust coal community. We still are very dependent on coal and natural gas. And we have a state legislature that is very anti-receiving large amounts of federal money for renewable energy efficiency. So every year, even though this is in all effect money that should come to our state and should be free money, we were fighting to just, with our own legislature, to get that funding. And so this constant tension, this constant stress, where I really had to also keep in mind, I have to be nice to the fossil fuel folks alongside, I want to promote solar, but people are still questioning climate change and everything. It just created these constant tensions where I found myself back at that burnout, because I was back at a point where I wasn't allowing my personal needs, where I believe in climate change. I believe we need to make a difference in how we operate, how we behave, how we invest, how we think about the world. It was at direct odds with what I was doing professionally, even though I was trying to do good, even though I was doing renewable energy programming, we were doing education, we were doing outreach, we were doing all kinds of really important stuff. And so I had to take a step back from that. And I got into commercial solar lending, which was the sort of starting point for finance, where I was like, there's a big gap here, right? Like, we can't just expect federal government to pony up grants and pony up these huge sums of money and expect something to happen, especially in a state like Utah, where we're very business minded, and we want to see that. And you can make an argument, the people, planet, profit thing, that resonates with a lot of business owners. But I'm not walking into a commercial building and saying, you should do this for the environment. They're like, get out of my building. Like, it's not going to have anything to do with their interests, what motivates them. And so what's really exciting now is starting to see that these opportunities in financing are coming in a way that we've never seen before. And fortunately, I'm really happy that I can do it in a way that does align with what I'm interested in personally, because going all the way back to being in California, I love the environment. I mean, I was an outdoor kid all the time. I studied climate change in college. But I couldn't figure out how I was going to get into this, because I'm not a scientist, and I didn't want to be an academic, and I didn't want to teach, and there was a lot of things I knew I didn't want to do. And so in a way, this kind of all came about through knowing what I didn't want to do, knowing that it didn't resonate with how I felt or what I wanted to do in the world, and continuing to find those pivots and those moves. And that's, Ed and I talked a lot about that last night. We went to dinner, was you're kind of constantly pivoting. So this non-linear thing, we're not, I'm not a doctor. I don't have this really clear path ahead of me that says you're going to do this for 5 years, and then this for 5 years, and then this is where you're going to end up. This is all kind of learning and maneuvering and trying to bring in really amazing people, because that's what's so exciting right now about this field is we have engineers, we have finance people, we have policy people, we have contractors, we have communities that we're trying to serve. So we're talking about community engagement. And so now this is at a level that we've really never seen this level of multidisciplinary engagement, and it feels really good.
Yeah. We'll come back to that.
Yes.
We're
Yeah.
definitely going to talk about that, the feel-good part of it. But I do appreciate the connection, the segue that you gave us to go to Washington, D.C. now with Kirsten. But I have to divulge that I met my wife also in D.C. And my daughters are going to have the same feelings that you're having, because they're German, Scottish, and Korean. So they're already confused. Anyway, so
Yes.
Kirsten, yeah, they'll stay confused for a while.
while.
Kirsten, we're going to go to you in DC.
Thank you so much, Ed. And it's really a pleasure to be here talking to all of you today, but also such a privilege to get the opportunity to hear the stories of my esteemed colleagues, Kerry and Shawna. I mean, we spend a lot of time collaborating over Zoom, sharing best practices, supporting each other in building this Green Bank community. But we don't have a lot of opportunity to talk about people's personal journeys. And it's a good reminder that we should be making time to do that. So I'll talk a little bit about my journey, and just to frame it, I've always had a really deep passion for sustainability and for the environment, and that's really the underlying theme that's driven a lot of my career choices and academic choices as well. But it really started. I also grew up in the California Bay Area, but my family has a 4th generation ranch in a town called Sonora that's about 2.5 hours outside of the Bay Area. And it's a working ranch, right? My family didn't come from a lot of resources, and for my grandparents, it was their primary source of food, right? And going there and spending time on the ranch with my grandparents and with my parents, and now with my children. But that experience as a child really instilled in me a great appreciation for the environment and nature and the role that it plays in providing us with food. So because of that, I've had a deep passion for the environment and protecting it since I was really young. When I went to grad school, when I went to get my undergraduate degree, I went to the University of California, Davis. I decided to focus on policy. I got my undergrad degree in international relations with a focus on the global environment, because I had learned that a lot of the environmental issues that we're facing, including climate change, are international in scope. And they are market failures where we need regulation and policy to address them. So I had this big focus on policy, and getting that degree in undergrad gave me a lot of frameworks for thinking about these environmental issues that I was so passionate about, like learning about the tragedy of the commons and why it's so important to have regulation to manage our natural resources that are subject to the tragedy of the commons. And also learning about the prisoner's dilemma and how climate change as a global issue that doesn't really have boundaries is subject to this prisoner's dilemma, where you need collective action and cooperation in order to address it. So with these frameworks in mind, I sought careers in working in policy and the international climate negotiations. And I ended up moving to Washington, D.C., actually where I also met my husband, who was also working in climate change.
You have to go to D.C. to meet your spouse. That's the day.
And I ended up working for an environmental think tank called the World Resources Institute, WRI, for several years on the international climate negotiations, which is a process under the United Nations, primarily under the United Nations, to garner collective action around climate change amongst 200 countries. So not an easy process when you've got all these different stakeholders with varying levels of contributions to the problem and varying levels of ability to adapt to the problems, and also just different priorities, right, in terms of economic, environmental, and whatnot. And what made it particularly challenging is when I started working on the international climate negotiations, I moved to DC in 2009. And that was actually when the Obama administration had been attempting to pass federal climate legislation, but in 2009 it failed. So even though we had a climate-friendly president, pushing for progress in the international climate negotiations was particularly hard because the US didn't have anything to bring to the negotiating table. So after working on the international climate negotiations for 3 years, I decided that I wanted to tackle the issue of climate change from a different perspective. And I think a lot of my colleagues working on climate policy and climate issues, instead of focusing nationally, I think the failure of federal climate legislation caused them to focus on the states and state and local policy for making progress. And I think that was a very successful strategy. The strategy that I wanted to take was focusing on the private sector. Because I really believed that if we wanted to have climate solutions that scaled, we needed the markets to carry that water, because policy, at least at the federal level, wasn't going to do that for us. So I went back to grad school and I got my business degree, an MBA at Stanford University. I also got a joint degree, a joint MS, because I really wanted to build out my technical knowledge and understanding of how clean energy technologies work. That was something that I felt was lacking. So I got my joint MBA and MS at Stanford. And after I graduated, I went to go work in the private sector pushing clean energy. I worked for a small private investment firm that was scaling investments in wind energy, and utility scale solar and eventually utility scale energy storage projects across the US. And at the time that I joined in 2015, you could probably count the number of investors in this space on one hand. And generally, the investment space perceived these types of renewable energy investments as risky. Our investment firm actually had originally been focused on oil and gas. And so a lot of our investors were these traditional investors, endowments, foundations, high net worth individuals. And they were kind of afraid of renewable energy. We kind of had to downplay the role of renewable energy in our portfolios. But over time, I think as the renewable energy industry matured and markets came to realize that it's profitable, you can make a return, and they started to understand the risk and the value that was there. We saw a lot more interest, so it started in the private investment space for renewable energy in 2015. By the time I left in 2021, everyone was investing in renewable energy. Everyone wanted a renewable energy exposure, which was great. It was really exciting. I think the markets had achieved what I was hoping they would, which is they could carry the water in scaling solutions to climate change just by their kind of economics and financial value alone. But that caused me to want to continue to look for opportunities to push the envelope. And so that's why I transitioned into the green bank space and am now leading the Nevada Clean Energy Fund, which is Nevada's nonprofit green bank that has close government ties. We were established by state legislation. But I joined the Nevada Clean Energy Fund as its first CEO in early 2022 to launch and lead NSEF's programs. You might be wondering why Nevada? Like I said, I met my husband in Washington, D.C. We were both working on the international climate negotiations, and we both have been passionate about solving climate change and clean energy. And similarly, he too transitioned into the private sector in clean energy and was working at Tesla. And he helped, basically set up the Gigafactory in Sparks, Nevada, and led workforce development for the Gigafactory. And then he and Tesla's CTO ended up, realizing the need for battery recycling and the value of those critical minerals. Mining from a spent battery is actually much more effective than mining from traditional ore, right? So they together started Redwood Materials, which is also based in Nevada. So we were living in Nevada, and it was like the stars aligned with this opportunity with Nevada's Green Bank and leading it, because it gives me the opportunity to continue to push the envelope and fill gaps and where the private sector.
Thank you, Kirsten. You just brought back really bad memories of 2009. That legislation did actually pass the House, I believe, but it just failed in the Senate. So yeah, it was a bad year for us. Anyway, but it resulted in the Healthcare Act, which was an accomplishment for the Obama administration subsequent to that. So now we'll turn to the topic of what you are all leading, the green bank sector. So what I'll ask Kerry to do, Kerry, if you would be willing to set some kind of a context. So we have a very mixed, as far as I saw the sign-up list, the registration list, and we have a very mixed group here. So perhaps you could start talking about what is a green bank and why, and just a brief history and some of the challenges that it's faced, the whole sector has faced until now, and why we're at an unprecedented moment where a pivot is going to occur, right? Because of the infusion of public funding right now. I know that's a lot, but you and I have been talking for a long time, so I know you know what I'm talking about. So
yeah,
you could cover some of the basics. That would be very much appreciated.
I will. So I'm going to start in 2009 with that heartbreak, because in that legislation was something called CETA, the Clean Energy Development Authority, that and that was meant to be a national green bank, kind of modeled on the, you know, the is it the XM, the Export Import Bank? I think of EXIM, but the Export Import Bank, you know, a public financing authority at a national scale to tackle, you know, the sort of investments that we need at scale for this country to transition its economy off of fossil fuels into green energy, a monumental task, right? And so that was a big vision in 2009, came to a crashing halt. And so the action in 2009 with that failure moved to the states. And so an organization called Coalition for Green Capital, Reed Hunt, folks like these are names that are really like in our world, they mean a lot to us. Richard Kaufman, Ken Berliner, there were Dan Esty, a group of policy folks who have been involved in and a lot of funders as well, involved in that National Green Bank legislation that turned their attention to the states. And the first state they turned their attention to was in Connecticut, where there was a new governor who had actually, his name is Daniel Malloy, he had actually run on the cost of energy driving out businesses because energy costs were so high. Connecticut was losing businesses, manufacturing, small business, like of all types. And so this group said, hey, Connecticut, this seems like fertile ground to try to get state level green bank legislation passed. Same model geared towards the state. And my business partner at the time, Brian Garcia, and I happened to have both a consultancy, People, Planet, Profit, around energy efficiency, community-based, and we set up a nonprofit to start to advocate across many states, including Connecticut, for just green financing tools at the state level. So we all kind of joined forces. And that was the first legislation that was passed at the state level to create a green bank. So we're going to talk about the flavors. There are many flavors of green banks. The Connecticut Green Bank flavor is a public financing authority. So it's a quasi-public financing authority like a state housing financing authority or an economic development authority. There are other flavors like Kirsten and Shawna, nonprofit, kind of government adjacent green banks. There are also nonprofit green banks that are not even government adjacent. They've just started up without government sponsorship. And then there are some green banks that are true instrumentalities of the state, like in New York State, the New York Green Bank is literally part of state government, not a quasi or a nonprofit. But all these green banks, no matter the form, so let's put aside the form and their funding sources, there are lots of different ways in which funding can happen. They all share a goal of catalyzing investment in clean energy where it's not happening, and also a goal of crowding in additional private capital to green initiatives. And this can span, you know, some green banks have different focus areas, but I'll speak to the early days in Connecticut. We were specifically focused on filling the gaps where clean energy was not currently happening. So even back in 2009, you had some utility scale wind and solar. We were focused on smaller scale projects where there was no activity happening. So funding improvements in homes, whether it was solar or efficient HVAC way back then in the day, 2010, 2011, it was still like getting folks off of oil and deliver fuels onto natural gas. That's not the policy anymore. We're beyond that. Focused on small commercial buildings. Really, we partnered with the Economic Development Agency in the state to really try to focus on those small businesses that had crippling energy costs, and it was, to try to stem the tide of businesses leaving the state. We passed some of the first, or maybe the first, commercial property assessed clean energy legislation that allowed clean energy upgrades to be financed through the municipal, through your tax bill, your property tax bill. An idea pioneered in Berkeley, California, that we brought into the state and did a state program on. We were focused on municipal and state buildings. So these were all areas in smaller scale projects where you couldn't get the private sector to invest. So we also had a strong focus on teaching and this is the advantage of being in a small state, I think, very small state, very clubby group of bankers and credit unions and investors. And so we had a really big concerted effort and outreach to create financing structures where our concessionary capital that came from the state and from the ratepayers could be blended in with private sector capital in a way that was comfortable to them, and they had a really knowledgeable partner who understood the technologies and the sort of cash flows that come with a pretty technical type of financing, to make it look like things they were already doing. They were already providing senior debt into financing structures, maybe in the real estate sector. So yes, this was energy, but we figured out ways to get them comfortable and get them to the table. And we were successful in bringing in, regional banks, community banks, credit unions, community development financial institutions. We partnered with our state HFA. And probably in the first 3 or 4 years, we innovated, 15, 16 different products and structures, which was, really exciting early days. And this, then started to spread to Rhode Island, and it spread to New York, and New York City had created a green bank. In the Obama administration, using early funds from ERA, the American Recovery and Reinvestment Act, Michigan had set up a green bank. And so, there was like this small kernel of folks who were like, on the phone, sharing lessons learned and what was working and what was not. So really exciting. And through these years, there were numerous attempts to try to get national legislation passed that were not successful, but continuing to try to work with Debbie Dingell from Michigan, Chris Van Hollen from Maryland, kind of other, kind of staunch supporters through the years. So constantly working at like the national level, but at the local level with this growing cadre of state and county and city green banks, and a growing community of practitioners that were sharing knowledge. And so what I so appreciate, and Kirsten's really a leader right now of, you've just stepped in and into the breach really in leading and organizing, now a 50 state group of green banks all along the spectrum, from the most seasoned Michigan, New York City, Connecticut, to startup green banks, some coming online right now, but really sharing and learning on best practices. But why is it so important? Because we have to transition our entire economy to, over time, move off fossil fuels and decarbonize. And it is an enormous challenge. And there's no way government funding alone is going to meet this need. We have to engage private capital providers of all stripes, from the smallest local bank credit union to, the big institutional investors and sovereign wealth fund, like all up and down the chain across all the different financing types. And so it is critically important that we do that now, because we are behind in making this transition. The effects of climate change are being felt all across the country, in all climate zones, in all kinds of natural disasters, and medical issues with heat and cold, and grid outages and the like. And one of the things that we have really, I think, as an industry or as a community of practitioners have come to appreciate is how critical it is that we bring the kind of big financing, Wall Street capital markets tools to our most underserved communities. The rural communities, tribal communities, low-income, disadvantaged communities that are otherwise going to be left behind and are bearing the brunt of crushing energy burdens and health impacts, and physical impacts, from weather and other natural disasters. And so it's so critically important in this moment. And then the unprecedented opportunity is the Inflation Reduction Act, which was passed and includes national resources to create a network of national green lending institutions and nonprofits, of which we are all, engaged in many, many different ways. So it brings us to this very moment, which feels like our moment to bring together, listening to each of our histories, all the experience that we bring, personal and professional. And it's not just financing, and it's not just technology, it's marketing and outreach and, policy and what have you, into this moment to take advantage of it. So I'll stop there and turn it over
Great.
to.
That's a great overview. Thank you. Kirsten, did you want to say something? I saw your hand go up.
No, that was more a hurrah.
Oh. We'll dive a little more into the funding issue, but let me turn to you, Shawna, to talk about the SustainEnergyFinance. When was it created, and the context in which it was created in Utah, and what your plans are?
No, absolutely. And hopefully, especially the Arizonans in the room, like there's a lot of commonalities across the Southwest, including Nevada, and sort of how we're thinking about this. So where I kind of stopped my personal story, I ended up creating my own consulting company, and I consulted for a couple of years, and I was really fortunate to have a really great roster, a great network of clients that I got to work with. And one of them was a local state legislator that was like, we really want to bring a green bank to Utah. We can't call it a green bank, we can't call it a climate bank, but we all know what we're talking about, right? And so, Kerry, to your point about all these states kind of working together, we called up Colorado and we're like, hey, can you give us your legislation? Like, what did you do? Can we take a look at it, and can we modify it for what works for Utah? Because we find there's a lot of common ground, and we don't need to recreate the wheel per se, but we do need to make sure that it's going to work in our state. And so I got a call from a legislator who we had sort of known each other for a couple of years, and then my name got brought back up to him as somebody who could read through it and provide some counsel, especially also with my experience working in government, and what our political appetite would be for how we design this, right? Is this going to be an appointed board by the governor? Is this going to be an infrastructure authority? Is this going to be a special service district, perhaps? Is this going to be state-led? If state, by who, right? There's actually a lot of these sort of technical questions that you do need to figure out whether or not you're going to get traction with that legislation. And then the other piece that we were looking at is, well, how much is this going to cost, right? Because that's a big part of these green banks. And this is why IRA is so transformative. A lot of these green banks, Colorado, Connecticut, New York, they either start out or they have continuous funding. And Colorado, I think, started with 30. Can I remember? Am I getting that right? 30 million?
Well, they started with nothing for a few years, but then they got 30.
That's it, right. So then they got $30 million. I can tell you with absolute certainty, I cannot go to a single legislator in Utah and say, give me $30 million to start a climate bank. It's not going to happen. And so we were like, all right, how are we going to think about this? How are we going to do this? And we kept sort of seeing the needle move a little bit, but not a lot. And then IRA happened. And then GGRF came out. And we looked at each other because Utah's kind of funny. We're small enough where the energy space is very small. So you might not talk to somebody for 5 years, and then you come back around and then you're suddenly, oh, hey, how's it going? And you're reconnected again. And so we were kind of looking at each other in this sort of renewable energy space, and we're like, if we don't do anything, we're going to miss out completely. And unfortunately, speaking especially to the communities that IRA is supposed to serve, being a conservative state, we have consistently underserved our population, whether it's our tribes, whether it's our rural communities, whether it's our minority communities. And it would have been devastating, frankly, if we didn't do anything. And we had put all this effort into state legislation. But again, going back to our peers and seeing what other states had been doing, we're like, well, wait a minute. Maybe we don't have to go the state legislative route. A lot of other states are doing something different. Cities are doing something different. And we have the flexibility and we have a clock. So let's see how we can do this really smart and really fast. And so we ended up talking with a lot of different green banks and found that going the nonprofit 501c3 route made the most sense for us, because to Kerry's point, we're filling a gap. The private markets are not operating in this space.
And when you think about nonprofits from, the IRS regulations, the mandate should be mission driven to provide services where there's gaps or where there is not support. And so we're not coming in and like pulling Wells Fargo money directly and saying whatever Wells Fargo charges we're going to charge. We're trying to think about it differently, and we're trying to approach it differently. Because the other piece to this, and this is going to be one of the big nuts we're cracking and what we're learning from a lot of our peers on, is how do we work with communities where they've traditionally been underserved by financial institutions. They've been traditionally ostracized from financial institutions. They don't trust financial institutions. And so we're having to really rethink and recalibrate. And we found that nonprofit 501c3 model made the most sense for all of these different needs that we have. And it doesn't preclude us from going back to the state and saying, hey, look, we just brought all this federal money in. We're making all these changes in our state. You need to start participating. And that there is some political appetite for that in Utah and potentially in Arizona, I'm not totally sure. But when you're demonstrating that success, that can often bring these sort of more conservative states along that are reluctant to make those really large upfront investments without seeing a proof of concept or without seeing the impacts and the benefits. So right now, in Utah, obviously we're moving very quickly to try to get GGRF funds just like everybody else is. And GGRF is the Greenhouse Gas Reduction Funds, which is this big pot of money that's going to these efforts. So we're scrambling to move quickly because Utah's also dealing with the housing crisis. And there's a lot of reasons for that. And this is not exclusive to Utah. But for us, the big key right now is affordable multifamily housing. Because typically that's been an underserved market. We have an enormous lack of housing. We have a growing unsheltered population. We continue to have substance abuse, mental health issues. So it's all these factors that, again, not unique to Utah, but we know that's where the biggest benefit is going to be. And given our regulatory environment, we can't go out and source community solar. We can't go out and do large scale virtual net metering projects. So the more technical people in the room kind of know what I'm speaking to, but because of the regulatory environment that we're in Utah, it restricts our total options when it comes to energy projects. So we're constantly doing that flexing and agile and move to make sure that as we're providing help and support, we want to do that now because changing our regulatory environment is going to take years if we're even successful. And our legislature just passed legislation mandating our coal plants stay open beyond original planned shutdown dates. So now we're also dealing with that piece of it too. So constant nimble agility is kind of the key to the game, especially in a state like Utah.
Thank you.
This is a long answer.
No, that's actually a great answer because you brought up a lot of topics and issues that I want to explore, but I'm not sure we're going to get all the time. We may have to do another session on this. Kirsten, what does it look like for Reno?
Yeah, sure. So I think I mentioned the Nevada Clean Energy Fund. We're relatively new, but have a couple more years on Shawna in Utah. We were established by state legislation. So the Coalition for Green Capital that Kerry mentioned was advocating for these types of institutions at the state level, was successful in convincing legislators to pass legislation that would establish the Nevada Clean Energy Fund. But like Utah, there's not a lot of appetite amongst our legislators or capacity, frankly, for capitalizing and funding a green bank. So we were established, but we weren't given any funding, which is who wants things to be easy, right? If they're easy, they're not going to be impactful. But part of why we were really launched when we were, which I joined in January 2022 to really launch the organization, was to take advantage of this really unprecedented moment that Kerry highlighted of these significant federal clean energy and climate funds that are becoming available because of the Inflation Reduction Act and to a lesser extent the bipartisan infrastructure law. I mentioned that, we keep referencing 2009 and the failure of federal climate legislation. That was a time when there was a lot of policy tools in that legislation, like cap and trade, to address climate change. But as I think we all know, there is insufficient political appetite at the federal level to pass those types of efficient policy mechanisms to address the challenge that we have. So the result is that the Inflation Reduction Act, which is probably one of the most significant federal climate policies that we have in the history of the U.S. And is playing a really big role in helping the U.S. Take big strides towards its climate goals that it's submitted under the UN. The Inflation Reduction Act is because we can't do cap and trade, because we can't do a carbon tax. It's basically throwing a bunch of money at the problem, right? And that's not necessarily a bad thing. It's just a huge opportunity. It's a huge challenge, but also a huge opportunity to take these funds, from that are at the federal level and implement them in an effective way that can benefit the climate and communities. So that's the challenge and the opportunity that we're faced with right now. And green banks and the Nevada Clean Energy Fund is hyper-focused, particularly because we don't have any funding from our legislature, on building the state's capacity to access and implement these funds. We're doing that. We're firing on all cylinders, right? Like Shawna said, we're working with affordable housing developers. Nevada too has a really big affordable housing crisis, and the funding that's becoming available for clean energy and that access to that capital is a huge incentive and resource for affordable housing developers to build that housing in a way that's sustainable and low carbon. We work with our tribes, huge historically underserved communities where, they have disproportionate lack of access to infrastructure, things like quality electricity access or good heating and air conditioning sources. And the funding that's becoming available from the federal government is a huge opportunity to address those injustices and provide solutions and energy infrastructure that provides them with critical services. So I think I guess from the Nevada Clean Energy Fund standpoint, 15 years ago, I was ready in DC to help implement federal climate legislation, and here we are 15 years later, and I am ready again. And green banks are playing a really, really big role in implementing these funds and driving these solutions, not just for the climate, but also for communities.
Yeah, I sort of feel like the clock's ticking for me too. So, all right, Kerry, I want to talk about the Greenhouse Gas Reduction Fund a bit, but one thing that came up is that all of you are talking about low-income disadvantaged communities and communities that have been left behind, and how the work that you're doing is trying to address that as part of finding our path towards a clean energy economy, right? And so the question that some criticism that I've heard already about the effort is that the so-called impact financing has been around, and a lot of folks have said that those programs have not really helped low-income disadvantaged communities. It has not brought more capital. It has not lowered the cost of projects and things for them. How would you address those concerns, and how are the green banks and the network that you all are working with are approaching this differently?
So I feel there are two topics there. If we talk about impact investors, I have a very strong perspective on impact investors, which is like finding impact investors who are really impact first versus market returns is like finding a needle in a haystack. The impact investing field is filled with a lot of money that is really looking for market rate returns that are supporting some sort of impact, whether it's environmental or social or a range of impacts depending on their focus area. Finding impact investors that are willing to provide the sort of concessionary capital that is needed to serve these sorts of communities that we've been discussing is extraordinarily difficult. and there just aren't enough of them. So like the amount of money that's focused in that concessionary, tranche is quite low and limited. But that's where I feel like the Greenhouse Gas Reduction Fund, this $27 billion fund, is becoming the biggest impact investor for climate in our history, and will hopefully attract more folks in. But it is grant capital to the folks who are receiving these funds, and then that funding will flow through to additional lenders. So there might be a little bit of a cost in there, but it's vastly lower capital costs than you would find from traditional impact investors. So how do we ensure that we keep a focus on low-income and disadvantaged communities that have been left behind? Well, it's quite easy. It's written into the legislation and it's written into the grant requirements, whether it's a minimum threshold of 40% of the benefits, all the way up to in some of the competitions, Solar for All and the CCIA Clean Communities Investment Accelerator. I forget what that IA stands for. That's between them, that's $13 billion that is 100% focused on low income and disadvantaged communities. So whether we want to or not, and I think the three of us very much want to, we're very focused on these underserved communities. If you're going to take advantage of these funds, you're going to have to focus there. And that's, I think, one of the brilliant things that came out of, like, it's almost like a gift for those of us that have been slogging away trying to unlock capital that will truly meet the needs of these communities.
So turning to you, one of the other questions that keeps coming up is, for a fund like yours or Kirsten's or others that are popping up, there's some concern that these will be one-time grant program, not really a sustainable program. What's your perspective on that? And what are your kind of plans for assuming that you have investment from the Greenhouse Gas Reduction Fund? How are you thinking that you're going to be viable for the foreseeable future and many, many, many years after?
Yeah, and it's a great question, and sort of to kind of elaborate on the question to give you all context, these banks need to invest that capital and then generate enough of a return, ideally, to be able to cover the cost of actually running the bank, right? So we're talking staffing, we're talking legal, HR, anything that you would need to run a nonprofit organization. When you come out of a state, or if you are a quasi-state agency, you often have annual state revenue that's covering those costs for you. So what Ed's getting to with a nonprofit is, are we just going to become sort of a pass-through, right? So in name, we're here, but we're really just kind of dependent on others with this grant funding to just kind of do some work, make it all sound good, and then we're done. And it's a really important question because these are not going to be cheap efforts, right? We're talking about a myriad of expertise. We're talking just on the financing side of it, an enormous amount of technical expertise. We're talking about the underwriting, the due diligence work, and then the loan servicing piece of that. That's it. I mean, think of like a bank operation. That's what, in many ways, what you can be responsible for doing, depending on how you think about the type of products you want to do in your state. And so actually, my partner, Sean, so Sean and Shawna, yeah, we did not do that on purpose, but it ended up working out that way. He and I have had a lot of these conversations because at the end of the day, the way we would ideally like is that we're self-sustaining to the point where whether it's the interest rates we're charging or the fees we're charging against capital, that's enough for us to cover our costs. But at the same time, we can't really depend on utility funds and we can't depend on state funds. And we also know, wait a minute, there's 49 other green banks that are doing this work too. And so we're actively trying to answer this question because we'd like to be self-sustaining, but we also don't need to recreate the wheel. And that was something I learned a lot at the state level. Like you end up kind of picking up programs from other states and you make tweaks to them that make sense for your state and you try to implement them to the best of your abilities. And so what we're actively doing right now is talking with, are there other nonprofits? Are there other consultants? Are there other banks that could actually provide support to us and we could pay them a fee so that we could still operate here, but that makes us much more efficient and it makes us much more cost effective than having to create a whole brand new green bank with all of that infrastructure
locally in Utah. Maybe we can pull in resources from other places. So there's no perfect answer to the question, but one of the intents we have is to be self-sustaining, and that's how we're thinking about doing it, under the assumption that we're not getting state funding and we're not getting utility funding to do it. So it's a little bit the mother of invention is necessity?
Necessity is the mother of invention.
Necessity,
Thank you,
yeah.
Kerry. And, you know, and I'm very privileged right now where I get to spend a lot of time on this work, but this is effectively volunteer work right now. And I've been doing this for a year. And that's a really hard ask to make of somebody when we're talking about low income and disadvantaged communities, especially asking them to volunteer a year of their time to help design products and talk with other green banks and participate in webinars. It's not going to happen. So we do have to be really thoughtful, and we have to be really efficient.
So there are two things, right? That you just talked about, costs of covering the cost of business. But I think the other people who have really envisioned a large financing in this area was really also to grow the assets, right? So there's still going to be some cost to the project participants, maybe not as much. What are you guys seeing there? What do you think? What do you expect there? I guess,
like from a borrower perspective?
Yes, from a borrower perspective.
Yeah, it's a really good question. And this is, and I'll just give context. So we're working on a home energy retrofit program right now for communities in Westside Salt Lake. Very consistently it's a historically redline community. It's located next to our interstates. It's located next to our industrial sites. So every myriad climate impact, air pollutant, environmental injustice components you can think of applies to this community. And we've had very frank conversations because, one, when we say the word loan, there's sort of this immediate light bulb that turns off, right? They're like, no. We can't have any meaningful engagement with this community. They don't have a capacity for a loan. We're like, okay, so how do we rethink this? How do we redo this? And the way that we're looking at it is perhaps there's a way we could do a sliding scale based on income and ability to repay, so that maybe, and Kerry, you were great. She and I talked at length about this, about households at 60% AMI in Utah or in Connecticut. Them taking on a loan is a very unrealistic possibility. So how do we maybe look at households at 120% AMI, have them take out a loan and use that to help cover maybe a forgivable loan for this household, or maybe a 0% interest loan, or maybe a grant for these households, so that we're looking at this as more of a holistic community-driven approach than individual borrower approach, because that's kind of how we ended up where we are right now, right? These financial institutions are looking at an individual borrower's creditworthiness, an individual borrower's credit history. And it's just not underwriting criteria that works in these communities. So we need to rethink it, and we need to constantly scale. And that's going to be a big case with impact investors. To your point, Kerry, like, we're not talking 12% returns. That's not going to happen in this community at all. And so it's going to be probably a bit of a fight too.
I think these are the kinds of things that I'm sure people are thinking about. That's why I'm asking. I want to go to Kirsten to ask a different topic, because part of also for green banks doing business, particularly on the greenhouse reduction fund, gas reduction fund, is this notion of actually spending some money on assisting communities. People call it various things like technical assistance, or providing customer service to our communities, so that they can actually come to you with a project plan or a proposal, right? How do you see that playing out, Kirsten? Because I think that's another, what I've been hearing is that that's a huge challenge, and you need money for that too, right? And that cannot be part of, or at least I've heard that should not be part of the returns that you're getting from people, right? So that's where the Greenhouse Gas Reduction Fund is set aside some money for technical assistance. But how much of that is a real barrier for you, Kirsten, in Nevada? Communities not ability to access the money essentially without help.
Oh, huge. I think it's a really big thing that we're focused on is that market education. And I think taking a step back, the whole thesis of the green banks are that these measures that we try to support in clean energy, whether you're talking about solar or electric vehicles and EV chargers, or efficient HVAC upgrades, like they're all cost effective, right? But there are just frictions in this system that make it challenging for stakeholders to adopt them. In some instances, that's access to capital, but I think in a lot of instances, it's kind of education and just technical capacity to do it. Like, you know, for example, a homeowner, their air conditioning breaks in the middle of summer and they just need to get it replaced, right? And they're not going to choose the more efficient option if it costs more, if they don't have the capital to pay for it, even if it means significant bill savings for them down the road. They're also not going to choose the more efficient option, like a heat pump, for example, if they can't find the contractor to install it. So there's a lot of work that needs to be done to remove these frictions in the system, and by providing things like training for contractors, you know, and also, you know, a lot of what we do direct outreach to residents and to communities. We partner with churches and host events in communities to help educate them about the federal tax credits that are available to them, federal home energy rebates that are going to be available to them soon. You know, and utility rebates. We're basically a marketing department for our utility in Nevada, and you know, we have staff as part of our residential energy upgrade program who help walk people through accessing these other incentives, in addition to providing you know, financing, basically low cost loans to provide to fill the gap. So, you know, it's hugely important. I will say I'm not sure that necessarily there's a lot of funding for technical assistance in the NCCIA that Kerry mentioned in the Greenhouse Gas Reduction Fund. There is in Solar for All. So I think we'll see a lot of technical assistance and opportunities for consumer protection and removing barriers in the low-income residential solar space. But in other spaces like electric vehicles, EV chargers, and whatnot, I think we're going to have to find resources for that type of technical assistance elsewhere. And that's one of the reasons why at the Nevada Clean Energy Fund, we've been focused on not just the Greenhouse Gas Reduction Fund, but also, you know, we applied as a third-party applicant on behalf of our school districts for clean school bus funding because they needed help accessing those funds, and we could play that role for them. We're, you know, helping a lot of our tribes apply for EPA community change grants. So yeah, we're doing a lot of that work and kind of building capacity and providing technical assistance on the ground. And I'm not sure we have a sustainable business model right now, but we are hopeful. You know, like Shawna said, if we can develop a lending operation and kind of cross-subsidize some based on financing of more profitable clean energy projects, then you know, that's something that we can do. But in the meantime, we're you know, primarily doing that technical assistance with grant funding, both from the federal government as well as from philanthropic sources. And Shawna, I just want to go back to a point that you made. It's interesting, this tension, you know, is it a loan, is it a grant? But I think part of the role that green banks play as well, and I know this can be challenging depending on the context in which you operate, is you know, going beyond that loan versus grant to find and innovate new financial solutions. Because, you know, even for that 60% AMI household, a loan to them may not make sense, but a loan for the project, financing for the project still makes sense, right? Because it's cost effective. And so if you can deliver that through another mechanism, like through PACE or on-bill financing, working with the utility, that can be a way to overcome that and not necessarily use grant funding and use that grant funding in a much more efficient way where it has a multiplier effect and it can be recycled. Yeah. Yeah.
So, Kerry, I do want to leave some time for our participants here to ask questions. So I'll give you kind of last question, actually 2 questions to end this. One is, you've been talking about clean energy, but now the program is really about greenhouse gas reductions. So what are some of the possibilities that you're hearing, seeing, kind of the frontier projects that you're kind of hearing about? That would just be, I think, interesting for others to hear. And then the second question to end is, going back to the beginning, people envision one bank because there was a scale issue, right? Now we have multiple green banks. And Nevada and Utah, I know, are very small markets. So how do you think that is going to evolve in this greenhouse gas reduction fund space? So two questions. One is, how much broader does it go beyond the clean energy? And the other is the scale issue.
Yeah, I think, I mean, all the attention has been on clean energy, transportation, buildings, distributed energy, but I think there's some really exciting opportunities in the water space. I mean, water treatment, uses a lot of energy, can be energy intensive. So there's opportunities there. And then nature-based solutions, which have absolutely struggled to get funding. There's some really interesting, opportunities around that. Things that maybe straddle, waste to energy, that's still energy, but it's, it's a combination of, potential ag, food and energy. So I think we'll see. I do think, that it's going to be fighting for attention just on some of the table stakes, the more, accepted technologies. But there was a really interesting grant competition to provide some resources to 6 green banks, won awards to start developing pipeline on water solutions that could take advantage of greenhouse gas reduction funds. So I think that's really cool to see, and it's a great way for philanthropy to partner. Instead of one national green bank, well, so we didn't get a national green bank, and then we had this proliferation across the country of state and local banks who are kind of joined together in a community of practice and sharing. And now we have, I think what EPA likes to call it is a national network of green banking infrastructure or something like that. So how is that all going to work? I think it's going to be messy, especially for like the 3 of us, right? We're each nonprofits. We each don't yet have sustainable models. We're each scrambling, to figure out how to take advantage of these funds. We really, believe there's an opportunity there. I think it's going to take some time for the big awardees. There are 8 awardees that have gotten national funding, essentially. It's going to take some time for them to settle on their programs, how they're going to, interact with us and support us and many other types of lenders. What sort of shared infrastructure can be built? And some of that may be at the national level, but definitely at the regional level. What you're talking about, Shawna, the Southwest, we already see Midwest, Michigan and Indiana have some shared infrastructure. So I think shared infrastructure, whether it's back office, whether it's products and programs or technology, I think we're in for many years, 5 to 7 years of a lot of flourishing. So I'm hopeful that will allow us to be efficient, because we did not get a national green bank. Like that did not happen. We have a network of national organizations.
Yeah, and I think one of the, at least for me, the positive opportunity is that however this plays out, the green banks themselves, whether it's Southwest or South, I think there's another coalition in the Southeast that's developing. They could also set strategic directions about investments, right? I mean, which is where I think these alternative greenhouse gas reduction strategies could be focused on. So cities like Phoenix or someone could do the same. So but the future is kind of murky, but very hopeful. So we'll end there. Do you want to, before we take any questions, any other things that you'd like to add?
I'll just to sort of put a bow on things. It's really exciting what we're doing in this space right now. And I think if any of you are interested in this or motivated by it, come talk to us. I mean, this is going to be a national, this is an international effort, right? Like, we've been behind the ball for a while. And so hopefully if this appeals to you, come talk to us.
Absolutely. And
we need everybody doing this.
Yeah.
We need contractors, we need staff, and everybody's in the middle of we need to hire people. And so it's very exciting. It's a lot of fun. And I really hope, even if this is not your passion, that you do get to pursue what means something to you and drives you.
Great. Thank you. So any comments or questions? Greg, do you have a...
I'm going to hand you the mic so we can hear you.
Yeah, if you could introduce yourself. And
Greg Galfie with the Arizona Finance Authority. I was curious as to how you think direct pay is going to play a role in this.
big topic. I think we're all excited.
Yeah, so we'll take 3 opinions. Go ahead, Kerry.
No, I'm just saying, big role. You know, there's so much we could spend hours on that. There, huge opportunity. I'll just stop there.
Okay, do you want to take it?
We were really fortunate. Rocky Mountain Institute, RMI, invited us to join the cohort to talk about direct pay and be a part of this and figure out. I mean, there's very much a, you know.
Could you explain for people who are not?
So basically, one of the big tools federal government has from a policy perspective are things like tax credits, right? And however, if you don't pay taxes, it's really hard to get access to those tax credits, right? And so historically, tax exempt organizations, so think schools, you know, government, nonprofit organizations, have not been able to participate in what has actually helped move our market along when it comes to the clean energy transition. And so now with direct pay, there is now a new IRS mechanism allowing these tax exempt organizations to now participate in those tax credits, which means from a financial perspective, and this is why this multidisciplinary approach is so important, it means the financials of these projects start to change. Because as for example, Kirsten was talking about working with churches, as a church, now you can access actually some money to help bring the cost down of your project, which might make it more viable for you to institute, right? And we know these are all great organizations doing a lot of important work, so why should they be left behind in this effort? So that's kind of the direct pay context. And for us, what we're trying to do is figure out how this is going to work, because this is brand new. I mean, and we're, you know, IRS is writing rules, they're creating a portal, they're figuring out how this all works. So there's a big administrative learning that has to happen. And then there's also just the practice of it. You know, I mean, Ed knows this better than most, being in the EPA too. You write something, and then when it actually gets to the ground, you're like, wait, there can be some miscommunication that occurs in that process, or there can just be, oh, we didn't think of this, so we need to kind of tweak and retool. So I think there's a huge opportunity with direct pay.
And the reason that everyone's smiling about this, because as you all know, from a public policy perspective, tax credits only benefit people with income. Yes. And so this is a huge deal. So anyway, so thanks for the question.
And I don't know if Kirsten or Kerry.
Yeah, Kirsten, did you want to add anything to that from Nevada?
Maybe I'll just say the 2 ways that we're helping direct pay get taken advantage of. One is through providing technical assistance, because, you know, these tax exempt, non-taxable entities, local governments, schools, nonprofit affordable housing developers, tribes, they've never like had to deal with the IRS in this way before. And so we're trying to learn as much as we can and help walk our stakeholders through that process. And then also there's a lag between when you make an investment in, say, a solar project, and when a big lag, right? We know the IRS doesn't work very quickly. It could be up to a year between until they send that direct pay cash payment back to that non-taxable entity. So that's a huge need for bridge lending from green banks.
Thank you. Anything else? Dave.
Thanks for a great conversation. What is the role, if any, of universities in this ecosystem? Are any universities participating in these green bank arrangements other than just providing potentially technology?
Yeah, it's a great question. Oh, Kerry, go ahead.
No, you go, Shawna.
There are different models. That's what Kerry's going to talk about.
There's different models. The way that we're looking at it with Utah is it's not just the technology piece. It's actually, we have an enormous breadth of expertise at our universities, and Utah tends to be very entrepreneurial focused too. And so, you know, Kerry, don't get mad at me on the social impact investing side of it, but we do actually have development offices at the University of Utah that are focused on social impact investing, and they're actually doing it in a really meaningful way. And so we're like, well, okay, come help us, like, let's figure this out together and work on it. And it's not just the technical pieces of measuring air pollutant levels and measuring air quality, but it's also pulling in all of those different resources. So, I mean, it's so different with every single green bank, but there's so many different ways a university in our space can participate.
Kerry, did you want to add?
We've just seen some really wonderful collaborations, everything from doing some of the research needed, like the market research on what on the economy, what's it going to take to decarbonize, like really local knowledge that can be used on training, whether it's certificate programs. So Yale University, I know Duke is starting one up, Michigan, have programs that are certificate programs to create more green bankers. And we need a lot more green bankers. It could be policy institutes that are helping either in the state or regionally put out research that is highlighting what's working, what's not. In University of New Hampshire, they have a Think Do Tank called the Center for Impact Finance. They are running training courses across lenders and project developers about how you take advantage of these new financing tools. So it's what is your university good at? Maybe many things. And do you work across the state or regionally to be a convener, to do research? It's like the sky's the limit.
Okay.
Lots of great examples.
Anything else? I think we're, Josh, we'll take your question last. How about that?
Yeah, so this is a little bit of a follow-up to Dave's question. And I'm here as director of the School of Sustainability. And and we have a lot of students that might be very, excited by this and thinking, how do I get involved in this field? And so kind of thinking a little bit more on the workforce development, what, you all have your respective organizations, but what are you really looking for, in terms of the skills? Like if you're, say, a sophomore right now, and you're thinking, man, I really want to go into this field, what would you sort of advise for students to be, skills they should be acquiring, classes they should be taking, et cetera?
Yeah, let somebody else go.
We'll come back to everyone, but let's start with Kirsten this time.
Oh, that's a hard one. Well, I think it depends on what your interests are. If you want to go into policy, or if you want to go into more of the technology side or the engineering side. I have the privilege of co-teaching a class at Stanford in the Department of Civil and Environmental Engineering called Understand Energy, which provides an overview of the energy space. And we go through each energy resource and we talk about climate change and other cross-cutting topics like how the electricity grid works and transportation. And, for each topic, we go into the policy, the technical, we go into each side. And I'll just make a plug because we recently put all of our content online. And so that's available not just for learners, but also for teachers as well to use in their classrooms. But yeah, I mean, I want to also make a plug for just getting out there. I think one of the things that I lacked when I was getting my education, I was really focused on policy. I lacked an appreciation for the actual infrastructure that powers our world. And now I actually get to run field trips, and host field trips in Nevada for our students to go out there and see how all of this is working. And it's just mind-boggling to see the scale and the technical aspects of how you actually make these projects work. So also just want to make a plug for that. Field trips.
Okay, you, and then I'll have Kerry close.
Okay, it's actually the question. The best answer I can come up with is it depends, because it also really depends on what they want to do. To Kirsten's point,
I advise the Salt Lake Community College on their certificate programs, because we're constantly like, okay, how do we make sure the people that we're training and certifying are actually getting into the real world with employable skills, right? And so when I think about that question, I'm thinking about what world do they want to go into? Do they want to go into a contractor space? Do they want to go into working for a green bank? Do they want to go work in an engineering firm? Do they want to go work in community engagement? Because all of those are going to be the parts that we need. And, yes, absolutely, a background in policy and economics and regulatory affairs and statistical analysis. And I mean, all of that is valuable and important. And I think part of the message too is also, even if you don't have that ABC checklist, Also expressing an interest and curiosity is going to be one of the most valuable things we have going right now, especially for this generation that's coming out of school. Because I mean, Ed and I are trying to think of like, what's the next 5, 10, 15 years? It's constantly changing, and energy, sustainability. I mean, there's really the level of like us being able to predict what that looks like is very low right now. So I think just that open-mindedness and curiosity to learn.
Kerry?
I don't have anything to add. These ladies have said it very, very well. It's our entire economy that we're transitioning. So think of all the skills that go into the economy that could have a decarbonization lens on it. And this is a great time to be looking at getting in the field or starting out your career.
Okay, well, thank you, all of you. And I look forward to seeing the two speakers soon in person. But let's have a hand for our